Hey, hi everyone. Welcome to today's session. Here I am going to cover how we use Google Sheet and Power BI to automate our personal finances and achieve our financial goals. So, right now I'm presenting a Google Sheet that I have set up, and if you see this sheet, I have multiple tabs here. First tab is goals, then we have assets, liabilities, expenses, income, and equity. Let's go through each of the tabs to understand how it works. So whenever we start goal-based investing journey, especially in personal finance, the very first step will be to set our goals, which is done through this sheet. If you see some of the entries that are in orange headers, they are user entry and the others are calculated. So let's look at the goals. In this case, so I have entered some dummy goals. Maybe you have a goal to retire and take a world tour, child's education and marriage, and to clear a mortgage loan that you have right now with you. You can assign a goal amount for each of these, and this will be the goal amount as per the date on which you are setting it. Okay, so say I have entered two goals, retirement and world tour. For retirement, I think that I need 3 cr. For world tour, I may need 1 cr, and that will be December 2023. So ideally I would like to take a world tour in this scenario. Similarly, for kid education and kid marriage, I have allocated 25 lakhs as per April 2023. And to create the mortgage loan, what I have done is, if you see there is a formula NPR, you can very well enter it directly. But the key idea here is, this is your EMI amount using NPR formula. If you Google, you will get to know that NPR will tell you the term, means number of EMIs that you have to pay, in a way based on the EMI that you are actually paying. So you get the amount. This is the negative amount, means this is the amount of money that you are going to pay to the bank if you just follow the EMIs. Okay, and if you start doing prepayments, obviously your principal outstanding will keep on reducing. So as you reduce this principal outstanding, the overall liability for you will be decreasing. Okay, then we assign priority for the goals. The reasoning behind assigning priorities for the goal is, whichever is a higher priority, means ideally that's more important to me, and I would like to uh, at least make that. For example, education and marriage of kids is more important to me rather than taking a world tour or retirement. Similarly, retirement is more important than taking a world tour. Now extending that philosophy, if you see, the goal type is mentioned. So goal type is, you can mention anything, but for any mortgage loans etc., that I am keeping debt because I use it in the other formulas. So very well, either you can modify the formulas or keep just use debt. Okay, then we have a principal outstanding that will only apply to the mortgage. Then for each of the goal, we can assume our own inflation rate. Here I have taken for education 10%, because as you know, inflation is quite high in the education sector, especially in India. While for others, I have just taken a nominal 6% inflation rate. Obviously, we can edit it as whenever we want. And then we come up with a current goal amount. So current goal amount is basically as of today, what's the goal amount that we need to save. So when we started with this goal amount, this gets updated based on the inflation number we have entered. So for these two, since it's the same month, the amount remains same. For the others, it is adjusted. Then there is a goal amount on maturity. So the maturity date means the date on which we want this money. It's adjusted, so it's the future value of the same. Now we'll come to the allocated specific and allocated all later, when we look at the assets. Okay, and then we have a completion percentage, which is just telling you that, okay, currently what do you need for the goal and currently what you have allocated for the goal. Okay, so that's just a percentage, and if the percentage reaches 100%, then you get Y, otherwise N. Now coming to our assets. So if you see the asset column, up, every asset has been manually entered. You can enter as much as you want, and for equity you can mm, directly take a VLOOKUP on the equity sheet. Okay, so let me move the equity sheet here. We'll cover the equity sheet next. But if you see, we have different goal assets, the current value of the asset type, say it's equity, fixed or property, and whether the liquid, it is liquid or illiquid. Anything that I can't withdraw easily is illiquid. For example, NPS, Sukanya Samriddhi, PPF, EPF are all illiquid, while others like investments in equity is liquid. I can withdraw it anytime I want. My saving is liquid. Okay, selling my property is illiquid. Now allocated to specific goals. So either you can say that okay, not allocated to any goal, which is none. For example, flat. I don't want to sell my flat to fund any goal. So obviously it's not allocated to any goal. And savings is just the working capital that I have. So that's also none. You can very well say that all. So what means all? That this particular amount will be auto allocated based on priority. So what I'll start doing is that whichever is the priority, which is not a debt kind of goal, mortgage type of goal, every other goal it will just take the lowest priority, allocate to that goal first from this amount, and then carry on the remaining balance to the next goal, and meeting it 100%. Accordingly it will fill the buckets based on priority. So that's the all part. Or you can allocate to specific. For example, NPS I have allocated to retirement, why Sukanya to marriage, because if you see the maturity of Sukanya, I can't use it for higher education, uh, since I'll need it at 20 when she is 21. So accordingly I just tag it to marriage just for demonstration. You can very well tag it to any other goal. Then PPF, EPF for retirement, flat for none, savings for none, and equity for all. So now it will start filling the bucket. So if you see now, then we have an allocated specific. So it is directly using the SUMIF formula to see, okay, for this goal how much I have allocated specifically, not from the all bucket, but I have just mentioned, okay, retirement, kid, marriage. And from the all bucket I have started allocating from priority perspective. So if you see, the lower priority goals have been met, while the higher priority goals, so obviously the amount left is less, so it's a under completion. Okay, so uh, that's how we use the assets and allocate it to goals. So if you see, all the amounts that you have saved in assets is getting assigned to a specific goal to meet that goal. Okay, and then your whole game plan should be that how I bring all my goals to 100%, or I relook at my goals. Okay, so that's what the analysis will be in the Power BI, which we'll see in some time. Then we come to the equity part. So equity part is very simple. You just keep on entering, say, I have just given the header as MF scheme. Just don't change it, because in Power BI it will create problems. Or you can modify the Power BI file also. But you can mention anything like I have some mutual funds here. I have some direct stocks also. So whatever investments you have, so you have the unit held, then invested amount that you invested, and then the latest NAV is directly pulled from Google Finance. So say I open Google Finance, and it's a simple thing. Say for example, I want to search a UTI index, UTI Nifty. Okay, UTI Nifty index. Nifty 50 index direct growth. Okay, so I get the script number or ISIN code, so we just directly put it here. So you say UTI index, and then we put the ISIN code, uh, remove this space in between, and then you will get the NAV, and then directly multiply and get your current value, and obviously the absolute return. Similarly for the scripts also, direct you can just put HDFC Bank, HDFC L&T. Okay, this way you are sure that you always have your current value of the equity part. Okay, and then directly from the formula I just put equity, and from the formula the sum value, it's been pulled. See, current value sum is being pulled here, so I know the total equity amount that I have anytime at any time. Okay, similarly we come to the liability. So it's simple, just give the liability name, or how much amount you have borrowed, what is the principal outstanding, what's the interest rate that you are having, and the EMI amount you are paying, and what is your total liability. So total liability is just the EMI amount, and the NPR left means number of terms left in your loan. As you keep on paying your principal outstanding, the total liability will keep on decreasing. Okay, as principal outstanding will come down, obviously the NPR part of the formula will reduce, and that's how your total liability will decrease. But it's important to know your assets and liabilities to calculate your net worth. Okay, then we come to the expenses, where you can just enter your expenses every month. Say every month at the end of the month you just sit and just mm, check like what's your expenses. Here I have expenses of say credit card also, so we can easily track like whenever we paid that amount. So when we get the credit card bill, we can just mention, and this will help us to check whether we have paid, because sometimes I'm forgetful and I'm checking whether I've paid my credit card bill or not. Okay. Then the final part is just income. Say every month you enter what is the income that you are getting. Maybe you are getting some um, passive income also. You can mention that as well. The importance behind entering the income and expenses. Say with income, you are able to know that what's the cash inflow. Expense is telling you what's the outgo. So income minus expense will give you your savings, and then that saving can determine what's your saving rate, as well as how much money you can allocate towards your goal. At the same time, for retirement, right, say you have written a goal right now, but with the expenses you will know the lifestyle changes that you are having, and you will be able to uh, evaluate the goal amount for retirement. Okay, so that's why you can, that way it's very important to track the income as well as expense. Hope this was helpful, and in the next video we'll go to the Power BI. So just I will give you a glimpse of the Power BI. Okay, for just a glimpse. So maybe I just show you the Power BI dashboard. So if you see whatever entries we did, we get a full-fledged personal finance dashboard, which gives us as of date what's our situation. We have certain metrics here which I'll delve deeper, but if you and then we can do some analysis on whether we can meet our goal. Okay, and how much investment we need. So that I'll cover in the next video. For now, thank you.